I don't think today was a surprise for, the market was pricing some chance of a 50 basis point hike. But I think when we looked at it, we had listened to what the Assistant Governor Christian Hawkesby had been saying recently and suggesting that they were still want to take a cautious approach and move in 25 basis point increments. So it seemed highly likely that it was going to be just a 25 basis point move. As you say, one of the challenges they face is they're now not meeting again till mid to late February. So they've got a large gap where they've only lifted by 25 and they've only lifted by 50 in total. And they've got quite a large inflation challenge, as they themselves are now admitting. And the way they're articulating that is to revise up the inflation forecast. And as you say, see a longer sequence of more hikes in their own OCR projections to give the market the sense that they are definitely intending that they will stay ahead of this if they need to get inflation to come back to 2% by the end of the forecast horizon. As you described, there's a lot of moving parts in all of this, but I think the main thing is, one, there wasn't a surprise in terms of lifting by 25. Two, they have revised up the track by about 50 basis points extra, and it's sort of mostly backloaded. So they've got a steeper track for their own expectations for the policy rate.
And do you think that, because we got that business inflation expectations data the other week, obviously for the 1 year it was sitting at around about 3.7, so that is requisitely high. But even if you look at the 3 year, that was at 2.96. If you look at the 5 and the 10 year, it does seem to be that, I suppose the sentiment in New Zealand is that the RBNZ is going to have a handle on inflation. Do you think that with all of their strategies, because I suppose you can transpose that against what we're seeing in other central bank environments, so do you think New Zealand's ahead of the pack in that respect in terms of inflation?
I think that's right. I think the inflation challenge is larger in New Zealand than we're seeing in other locations. But we're also, we've seen the RBNZ lift its policy rate twice already. And actively point out that they intend to be lifting their rate quite substantially over the coming period. So the RBNZ is onto it to try and slow things down. I think there's a word of caution that we ought to keep in mind here, though. I mean, if you look at the narrative from the rest of the world and the other central banks, a lot of this is regarded as transitory. A lot of it's being treated as somewhat transitory. That's still an element of the New Zealand story as well. The other thing I'd point out is, market conditions have already tightened quite substantially. Mortgage rates, fixed mortgage rates are already up quite sharply. And we know that there's a very large load of household debt in the New Zealand economy. So they may very well get quite a lot of grip with both the rate rises they've delivered and the intention that they're going to deliver quite substantially more. And if you look at the history of the RBNZ's own projections, they tend to, over-project in one direction and under-project in the other direction. So we shouldn't take this as given. Financial conditions will tighten quite a bit as a consequence of this, and this may very well slow things down. So we're of the view, actually, that the RBNZ may not end up having to deliver quite as much as they are articulating in today's statement.
So what do you think this is going to mean for households? Because obviously this, from what you're suggesting, would perhaps put a bit of a dampener on the ridiculous price inflation we've seen in households, but also on, I suppose, the household balance sheet side. Do you think that there's any kind of risk with this hiking schedule that they do currently have?
Well, we haven't seen much of a cooling in the housing market as yet, but I think as the RBNZ leans into this harder and harder, as we're seeing with both macro-prudential tools and the hike today and the intention that they're going to be hiking sequentially through next year and into the following year as well, it is likely to start to have an effect. It's likely to cool that housing market down. It's likely to slow down, weaken economic growth to a degree in the back half of this, this forecast horizon. As I say, we haven't got quite as many hikes as the RBNZ themselves are saying they might deliver. And if you look at history, they don't tend to deliver quite as many typically as they tend to project at the back end of those horizons as well. So keep all that in mind. And the inflationary spike is partly transitory. Yes, it's strong, and they're also onto it pretty quickly.